Good morning, everybody. Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and my mission to help you guys own it. A little bit better in the markets today. Things are looking up. I'm looking at the futures right now, and it is not so bad, everybody. Take a look at the S&P 500 real quick, and we're looking at 0.8 in the green. It's up 34 points. The Dow's up 0.7, which is good for 228 points. The Nasdaq's at 125. That is up 1% this morning. Crude oil's also making a pretty decent move. It's up a whole dollar, sitting at $74.18. That is your WTI crude number. And then also, Bitcoin making a hell of a move this morning. That is up 5.5%, or 1,499 points, sitting at 28,465. So pretty decent move in the markets overall. Some are citing that perhaps people or investors are a little less worried about the banking crisis. We'll get into that. Also, as you can see by the poll, we're going to talk about the AMC news and kind of just dissect that a little bit to see what's the probability that Amazon might actually do this. There was an article that came out that Amazon may actually acquire AMC theaters. And that would be very interesting. So I'm going to give you the details and if or when that could actually happen. And the poll is not disappointing so far. Appreciate you guys participating in the poll here. We'll be reviewing that in just a moment. Don't forget, we also have weird news coming up as well as birthdays towards the end. And let's go ahead and hit up my starting five. We got Jason Batts, Biker Brian, Jose, Pastor David Hopper, and Boss Don CEO. You guys are starting five. Thanks for tuning in this morning. I certainly appreciate it. If you guys missed the starting five, it could be because you're not subscribed or hitting that notification bell. So make sure you do both. Get here early, and you might just get shouted out in the next stream. So, as I'd mentioned, Amazon looking to buy up AMC. We're going to talk about that in just a few minutes. But I wanted to take a look as well at the SPY, the overall market here. Here's your morning move on the SPY. Real quick, I wanted to kind of just show you a little bit about what's going on here. Pretty decent gap up. Let's take a look here. Pretty decent gap up on the S&P 500 ETF, and you can see that it's looking like it's trying to open above pre-market highs. We got about 23 minutes before the market opens, so we will, of course, continue to take a look at this. The Qs, of course, are also coming right on back and looks great. Yesterday we had a decent pullback on tech stocks, Meta and NVIDIA, AMD. They all kind of took a back seat. Let's take a look at the NVIDIA chart here. But as I'd mentioned, look, just moved right out of that zone. This is one of Don's zones here. It just moved right up out of that, and it's been sitting pretty here. NVIDIA looks great right now. I would venture to say this looks like a pretty decent long move here on NVIDIA. So the theory, I guess, if you want to call it, remains, in my opinion. I think that tech is still going to be a huge leader this year in the overall markets. NVIDIA obviously making some pretty strong arguments as to why it should be in your portfolio. Also, Meta Platforms is back over $200. It's actually sitting at $202.77. That's up 1% this morning, making some pretty strong moves here. We take a look at the 4-hour chart, and it's looking pretty good as well. I would watch to see if perhaps it maybe retests. This is a 4-hour chart. Retest that 205 area. If it breaks up over 205, I think that we have some pretty decent momentum behind Meta right now. It looks pretty darn good so far. Liking that move there after yesterday's pullback, and really a pullback over the last several days. This looks pretty good here as well. So tech stocks in general are money. I don't think that there's any reason to deviate from them at all. I talked about how I wasn't mad about the pullback yesterday, and I wasn't, but it looks as if they are back at the forefront today. Checking in on some of the comments here. In the morning, Pastor David Hopper says, in the morning, I wake up and make most of my trades and usually listen to a YouTube person. I'm assuming that's not me, and that's okay. For about 30 minutes before the market opens, reads off the news around the world and everything. Nice. Uh, and then he says, kind of gets me quickly to what I should be looking at. Just a suggestion for 2 different streams you're putting out. By the end of the day, it's enjoyable to hang with you and have fun. I can appreciate that for sure. Yeah, I'm still trying to figure out the appropriate structures for morning and afternoon and what that all should look like. I certainly agree with that. Appreciate the feedback of the trading fraternity. Yeah, they're good. They're good guys. If you're just looking to get those quick pops of news. Nameless says, what do you think of natural gas? We'll talk about that. Heinz N says, when you say tech, are you talking about large tech? Primarily large tech, yes, but I've also talked about how I think small cap tech is also going to do well. We could take a look at the IWM, for example, and I think that there's a lot more room for the IWM to move. We could see a nice little breakout over 177, and I would really like that to happen. If you're looking at small cap tech, I've continually gone back to, and I feel like I'm sounding like a broken record, but stocks like CrowdStrike, cybersecurity, in my opinion, is still going to be a huge mover in the markets. We get a decent break over this trend line, and I think CrowdStrike's going to continue to make strong moves. Yes, it's overvalued a little bit from a valuation standpoint, but you cannot argue the growth there. I think it's worth paying a premium for. You take a look at companies like SoFi as well. SoFi is a decent one to take a look at. It was Square until they ended up getting wrecked, but it's actually had a pretty decent bounce from the Hindenburg news. I don't know about Square just at this point. It makes it a little bit difficult to trust based off of what we're seeing from some of the investigations that have come out from Hindenburg. Obviously, Hindenburg is a well-known shorting platform, but there are many times where they are not wrong. So I'm just trying to be cautious with Square. You can look at something like PayPal, I guess, if you're a little bit nervous about Square, but it's been kind of just living in this kind of no man's land. There is a lot of small cap tech that I think is worth taking a look at. AMD is not small cap tech, but AMD also making a move. The semiconductors are all making moves here. Qualcomm looks great. That looks good. If you want something that's a little less overvalued, but still in the semiconductor space, I like this one as well. So yeah, I think small cap tech. But listen to me when I say this, and I appreciate you already thanking me for this, Heinz. And it's got to be small cap tech that's making money. Okay, profitable small cap tech. I know I threw SoFi in there, but they are growing at such a ridiculous rate, and they are really close to being profitable. So just keep an eye on that one. But primarily, if you're going to go after small cap tech, it's got to be small cap tech that's making money. So profitable companies in the small cap tech space are going to probably do well. And why, right? Why does it have to be profitable? Why do they have to be profitable? And the big reason is because they're less likely to take out more loans to then become profitable, to continue to grow their business. Whereas these smaller cap tech stocks that are struggling, are not yet profitable, are going to need to continue to borrow money to continue their efforts to grow. They're borrowing money at a time where interest rates are super high and, relative to what they used to be. And so their growth is going to slow. And in many cases, there is a lot of risk that they may not make it. So just be cautious with that. Make sure that if you are buying something that isn't profitable, that there is a clear path to that profitability and very little question as to whether or not they're going to make it. So just be cautious with that. I always ask myself, I always tell people, it's like when they ask me about stuff that is not profitable, especially in this environment, it's kind of like, well, you could buy that, but why not just buy something that's actually credible, that has a, decent track record? Like, they're still going to make you a decent amount of money, and it's going to be pretty darn good. So just keep that in mind when it comes to the small cap tech stocks. I know it's easy to just kind of jump into some of these penny stocks in general and just be like, oh, well, it's going to make me $1 million. And then you kind of find out that it's actually not. So just be careful with that. Small cap tech, definitely something that I would check out. Just make sure that you're looking at profit. Or some of, well, going to cover some of this other stuff here. I hope I'm not breaking up. I just got a notification that the internet's being a little wonky. I hope I'm coming through okay. If you guys notice that something's acting up, please let me know. All right, let's get to some of the other news. As I'd mentioned, I will be talking about AMC and the Amazon potential acquisition. Okay, thanks, Heinz. Thanks, guys. Appreciate that. If it gets worse, let me know. I had to reset my internet earlier, so it's been kind of weird. I will get into the AMC and Amazon news in just a moment. But I wanted to cover some other news that happened last night and going into this morning as well. Let's first take a look at Micron, since we're talking about tech and kind of sticking with that theme. Micron came in and actually had terrible earnings, and the stock's actually doing well. It's up quite a bit here this morning. Let's take a look at this. So right now, Micron's up 3%, which is crazy. They came in with a wider than expected Q2 loss. They rose now up to 3%. Investors are focusing apparently on the company's long-term prospects. This sounds like BS to me, but hey, nevertheless, it's moving up out of this zone. So keep an eye on that. CEO Sanjay Mehrotra said that he was confident in the firm's long-term demand outlook for Q3. The memory chip maker predicted a loss between $1.51 and $1.65 per share, with a revenue projection of $3.5 to $3.9 billion. That actually came in line with expectations, and in fact, the guidance for the fiscal year was somewhere around $5 a share, somewhere between $5 and $5.25 a share. Now they're expected for fiscal year to come in at a loss of around $2. So I'm just trying to figure out why Micron seems to be the buy here. Obviously, you can kind of see the chart and what that looks like. The momentum's certainly there. But fundamentally, this makes no sense to me. And I talked about this last night. Just keep an eye on Micron. Maybe it's just following along with the rest of the market, but it's up 3% as a result. Then we have Lululemon. They came in with earnings last night. If you guys didn't catch Lululemon's earnings, they knocked it out of the park. I mean, absolutely crushed it. Those $100 yoga pants really making moves in the market right now. The stock's up 15.5% and continuing to make moves here. It looks like it's trying to test this zone here at around 367. You got the next zone up here at around 379. So we'll see where this goes. Right now, it looks as if it's given back some of those gains. It was up more than 15.5% this morning. If you guys didn't catch that news, here's what happened. Lululemon surged a ton this morning. The advance came after the company's release better than expected quarterly earnings. Revenue soared 30% to reach $2.8 billion, topping projections by $100 million. Looking ahead, the athletic and leisure apparel maker predicted Q1 earnings per share of $1.93 to $2, above the $1.64 that analysts had expected. And the revenue here for guidance was also ridiculous. The consumer is still very strong in athleisure, as it would seem. We got some really strong numbers from Nike last week, and Lululemon just absolutely blew everybody out of the water. So really interesting here. Lululemon is still actually quite expensive, in my opinion. It's trading at 28 times next year's earnings, and it's actually going to be probably much higher than that once we get into the open and this kind of updates. But this is as of yesterday's close, the forward price to earnings was 28 times. So this is quite expensive. Market cap is at $40 billion. And this is a company that's bringing in, let me see here. It's bringing in around $6 billion, $8 billion a year. And its market cap's at $40 billion. Just seems expensive. Okay, so that is Lululemon. I mean, you can't deny the fact that they crushed it. So that's certainly something that we want to take a look at. Would I buy it all the way up here? I would not. I would wait for some sort of pullback if you guys are looking. Okay. Macy's has news today as well. If you guys hadn't checked out Macy's, that stock is actually down 1.25%. They revealed that its chief executive, Jeff Gennette, plans to retire in early 24. The 40-year company veteran expects to step down in February, with Bloomingdale's chairman and CEO Tony Spring taking over the CEO role of Macy's. It looks as if investors don't really care for that all that much. It's really interesting. Whenever there's a CEO change, it's like sometimes investors are really happy about it, sometimes they're not. And I guess obviously it depends on the performance of the company while that CEO is at the helm. But Macy's hasn't been like, here's your weekly chart on Macy's. It hasn't been just like a knock your socks off performer, right? So I would expect that a new CEO, a new fresh face in the company might actually be a good thing. Stock's trying to claw its way back. We'll go back to the 5-minute chart here. Trying to claw its way back here in pre-market trading. So we'll see what happens to it by the end of the day. But that's your news on Macy's. And then Restoration Hardware. If you guys didn't catch yesterday's stream, I mentioned that Restoration Hardware has earnings today. I will be reacting to those earnings. It's up around 2% so far this morning. The firm's quarterly profit is projected to drop to $3.36 per share, and revenue is expected to slide as well as to around $777 million. But with Restoration Hardware, it's very interesting to see the price action of this and the consumer as it relates to expensive shit. When I look at companies such as Lululemon, where their target demographic is not poor people, and Restoration Hardware, or even something like a race, for example, Ferrari, right? Ferrari has been going apeshit. They've been selling cars like crazy. And so much so that Ferrari is got a forward PE. This is a car company, a legacy car company that's got a forward price to earnings at 39 times next year's earnings. Now, for perspective, if you guys hear me talk about price to earnings all the time, and I had one of my loved ones reach out to me and said that they watched my show yesterday and maybe I got a little ahead of myself, and don't go back and quite explain things so very well. So this is the forward price to earnings. So this is the projected price to earnings number, multiple, for the next year. So the market is a forward-looking vessel. People are buying stocks typically based off of what they see in the future performance. They're not buying off of what's going on right now, which is why we always talk about earnings and how earnings, don't necessarily mean anything. It's the guidance that actually gets the stock moving. So this forward price to earnings is a metric that a lot of investors use to kind of gauge the market and see where we're at. The price to earnings for the entire S&P 500, you combine all the companies of the S&P 500, and it's around 17 times next year's earnings. But if you actually take out technology, the big tech FANG stocks like your Googles, Microsoft, Apple, all those big giant tech stocks, the forward PE of the S&P 500 is actually at 14. So when I talk about race or Ferrari, this is at 40 times next year's earnings. So way higher than the average of the rest of the S&P 500. But they are selling like crazy. They're selling cars like crazy. Ferrari's growing their revenue at 20% year over year, and their profitability is at 50%. That's up there with the gross profit margin is actually higher than Tesla, for example. The growth isn't anywhere near what Tesla's is, but 20% is pretty damn good for a legacy auto company like Ferrari. So that tells me that the rich are doing just fine, and they're spending money still just as they always have. And so getting back to what I was talking about with Restoration Hardware, the projections here are that they're not going to do well. And I'm not saying that they won't. You know, if most of the market is thinking that Restoration Hardware won't do well, then I'm sure there's a possibility that that could happen. The growth here hasn't been great for them. They've only grown at around 1.5% over the last year. Profitability, though, is at 51%. Their gross profit margin for everything they sell is 50%. That's crazy. You combine everything they sell. I mean, these are $15,000 coffee tables we're talking about, right? Restoration Hardware is also not for the poor. So I'm just curious to see where this goes. The difference that we can, or the argument that we can make for something like a Restoration Hardware versus like a Ferrari or whatever, is that you buy a piece of furniture for your house that you have forever, and you're probably done buying furniture for a while. Whereas Ferrari, for example, you buy a car, especially if you are a Ferrari owner, you're probably not going to own that for more than 2 years and then you want the next Ferrari, right? So that also could be an argument here. So that's why I think that there's potential for Restoration Hardware to underperform. But what if this is a situation in which it's so bad it's good? And that's what we're going to find out this afternoon. Make sure you guys are tuning in. I'm going to be reacting to Restoration Hardware after hours. $3.36 is the estimated earnings per share, $777 million in revenue. Upward revisions here from the street, from analysts, is 4 to 8 downward. So it's kind of split, but you do have more analysts expecting a downward move on Restoration Hardware. Pre-market right now, it's actually up 2%. So it is looking pretty darn good so far. Let me know what you guys think about my thesis, my thoughts on this, and my analysis on something like Restoration Hardware and how it compares to consumer spending everywhere else. Would love to hear from you guys. I see a couple of comments here. Darren's asking about Crocs. I saw somebody asking, Nameless was asking about natural gas. We'll talk about that towards the end of the show, so make sure you're sticking around. Chris Edwards says, my 11-year-old daughter wants to go to Lululemon and spend hundreds of dollars and not Macy's when we go to the mall. It seems like Macy's is for older people. Chris, yeah, Macy's has been for older people. This isn't anything new. I mean, I think for decades it's been for older people. I remember when I was a kid, I didn't want to go to Macy's. My grandma did. It was that, or remember Leggett's back in the day? Does Leggett's still exist, by the way? It was like Macy's, Leggett's, Hex when that was around. Remember Hex? And then Belk, which is still around, but Belk's is mostly for older people. But man, remember all those older stores? Macy's is managed to stick around. But yeah, I remember Hex. What was the other one say? Leggett's. There's a lot of old people stores like that. Montgomery Ward's, yeah. Caldor, remember Caldor? Oh God, I'm dating myself. Heinz says maybe Ferraris are an inflation hedge as people want to employ cash to get out of the dollar. I don't know if I would be buying cars for that, Heinz. I would be maybe buying some sort of I'd rather buy art. Art would be an appreciating asset. Ferraris are not, unless you buy some rare thing, right? Most cars are depreciating assets. So, Turkboy says, Brad, look at NBC Master Brand cabinets. I'm a local truck driver, and they are the #1 cabinets I see moving throughout the country. We can take a look at that as well. Appreciate Ross. Oh, Ross is still around. I don't know if that's old people's store. Heinz says we couldn't afford Macy's when I was a kid. Yeah. So on a personal note, when I was a kid, my parents split up when I was 5. My dad's side of the family had money. My mom's side did not. So whenever I was at my dad's house, hanging out with his family, we shopped at Macy's. When I was at mom's, it was not quite Macy's. It was quite a different dynamic. I had a great childhood for the most part. And it was, not always about the money, but that was definitely the dynamic in my two household, whatever you want to call it, right? So I definitely can appreciate that, Heinz. Yeah, for sure. Okay, so let's talk about AMC. So AMC last night, I didn't really cover it last night because the news was breaking and I wanted to make sure that it was legit and all that stuff. But AMC popped 13% as the market is now officially opening. It's interesting to see that AMC is now selling off, down around 1%. So let's look at your 5-minute chart here. AMC actually moved quite a bit yesterday. And it's falling out of this zone, which, by the way, if you want to check out these zones, these are custom charts that are from none other than your very own Don Fran from the Don Fran Show. If you want to go check that out, you want to get access to these charts and have these laid out for you, go over to patreon.com/ownthechaos. That link is in the description. It's starting at $5 a month. You get exclusive content for me, yours truly, as well as Don. You get access to these charts, trade alerts, our Discord, all kinds of stuff. Again, starting at $5 a month. You can't beat it. It's a great value, and it helps support the channel and my content creating efforts. So I certainly would appreciate that. Go check us out over at patreon.com/ownthechaos. It's great value. Great community to be a part of. Darren Anderson says we used to shop at Kmart back in the day. Yeah, I forgot about Kmart. Blue light special, baby. Poor as dirt, happy as hell. Yeah, that was essentially me growing up. Payless. We shot the Payless quite a lot. Rest in peace, Payless. Okay, so here's the news on AMC. So there is reports that Amazon is looking to potentially buy out AMC. Amazon's reportedly considering the acquisition of AMC Entertainment, the world's largest chain of movie theaters, as a means of promoting its content and services. According to the report from The Intersect, Jeff Bezos, Amazon's founder, has assigned his team of investment advisors and entertainment executives to explore options for purchasing AMC and its chain of nearly 600 movie theaters in North America, Europe, and the Middle East. An Amazon insider cited that the Intersect report explained that the e-commerce giant's views on potential acquisition of AMC as a means of obtaining brick-and-mortar marketplace stations that could be used to promote Amazon Prime movies in addition to cross-selling other Amazon services through the distribution hubs. The acquisition could help Amazon promote its content and services to a wider audience and expand its reach beyond its existing customer base, which is vast, by the way. However, discussions are still in the early stages, and it's unclear if Amazon will make an offer. The Intersect emphasized that the discussions are fluid and that Bezos could wait for AMC stock to decline for the beleaguered company to enter bankruptcy so that it's purchased at a discount. AMC Entertainment has struggled financially since the COVID pandemic, which brought with it restrictions that, for a time, limited in-person audiences at theaters, while those restrictions have largely been lifted. The onset of inflation has made it harder for families struggling with rising costs to go to the movies. I don't think that's actually it. Yeah, this is according to the Intersect, by the way. Despite these challenges, AMC's stock surged more than 13% on a trading day on Tuesday. It's actually more than that. Following the report, closing at $5.15 per share with a market cap of about $2.67 billion. The stock has traded over $20 per share in August 2022, but plunged as it remains under $10 per share since September. It's down 72% over the last year, guys. AMC became a prominent meme, as we all know. Fox Business Charles Gasparino confirmed that Amazon has long considered a possible purchase of AMC, but for various reasons, just hasn't pulled the trigger. He added that Amazon is primarily interested in the potential of buying AMC as a distressed asset, and that there is no deal on the table and that there may never be. Amazon declined to comment on reports, and AMC did not respond to requests for the comment, despite the uncertainty around the potential acquisition, and that is according to the Intersect, as well as Seeking Alpha, as well as Yahoo Finance. I took all of those and wrote my little blurb on that. So hopefully you guys got all that. And here's my thoughts, okay? So as you can see, AMC actually selling off now, down around 2.5%. Why? Couple reasons. It could be that investors kind of really aren't as excited about this because this is a maybe acquisition. This isn't a definite acquisition. Also, this is something that I think isn't going to happen until AMC goes bankrupt, as the Intersect kind of pointed out. Wedbush, Dan Ives, if you guys aren't familiar with Dan Ives, huge technology stock guru, analyst, whatever you want to call him, over at Wedbush, financial firm, also talked about this, about how it would make 0 sense for Bezos and Amazon to go after AMC right now, given all of the liabilities that AMC has. And in fact, Dan Ives actually pointed out that Cineworld could be an option. This is a over-the-counter stock. Cineworld is something that that they could look at that's much cheaper. That market cap's at $41 million. Now, Cineworld isn't quite as big as AMC, right? And what's a couple billion to Amazon? Nothing, right? It's pocket change. But if we can get it even cheaper, once AMC goes bankrupt, which there is a strong possibility that could happen, why not scoop it up then? Why not just wait for it to die so you can come in and be the white knight, right? That would be the smart business move on Bezos' part, and I think that that's probably what's more than likely going to happen. Cineworld is the second largest movie chain. If you're not familiar with Cineworld, they are UK based, but they also own Regal Cinemas, which is the second largest movie chain in the US. So that to me would make more sense if I were to go after something like that. But AMC is still actually overvalued. The other thing is that AMC continues to dilute shares. The whole split, the whole ape split, all that bullshit has just created more ways for AMC to dilute shares. And I know that there's a lot of diehard AMC guys out there that just want this thing to go to $100 a share or more, and it's never going to happen again. There's too many shares. AMC, Adam Aron screwed over investors when that ape split happened, and there's too many shares in the share structure, in the float, to actually get this. Like, a ridiculous amount of people and institutions would have to buy up AMC for it to even get back to $20 a share at this point. And it's ridiculous. Like, it's absolutely ridiculous. We take a look at AMC's share structure. Let me actually pull that up. I can show you AMC. I can tell you what their share structure looks like. And this is probably a good lesson for anybody. If you aren't familiar with share structure and how it works, you have your authorized shares, which are the amount of shares that are out, that make up the entire share structure. Then you have outstanding shares, which are the shares that people own. That could be restricted, unrestricted, what have you. And then there's your float, the actual amount of shares that are trading in the market between retail, institutions, what have you. So you have shares that executives own, that perhaps large investors own, what have you. And then the float's really kind of what matters. That float's increasing almost every single day, especially with the vote on the reverse split. For whenever that happens, they're going to do that reverse split so they can continue to just dump shares into the float. The outstanding shares here are 929 million shares. That's almost 1 billion shares of outstanding shares that could potentially come into the float if there's not already a large amount of that in there already. And for a $5 stock, that is a ton. 1 billion shares is a lot for something that's trading at 25 cents a share. So that's what you're up against when it comes to AMC. And that's what I'm sure Bezos and crew is also looking at. I think that that's something that I would just. He's got nothing but time at this point, right? It's a fantastic. So looking at the poll today in today's chat, I asked, should Amazon buy AMC? 37% say yes, it's a huge opportunity for marketing. I don't disagree with that, but the timing here is what really matters. No, they'll for sure lose money. It came in at 44%, and then maybe when it's cheaper, it's 12%. And that's where I am at. I'm with the 12% of you that said maybe when it's cheaper, they should buy another movie chain at 7%. But that's the camp that I'm living in. I'm living in with the 12% of you guys that voted that maybe when it's cheaper, because I think it is going to get a lot cheaper. And in fact, I think they might end up going into default. So give me your thoughts on that, guys. I certainly would be happy to make some counter arguments, what have you, or hear your counter argument on why they should buy them now, other than the fact that you own it and you want it to go back up, right? Why should Amazon legitimately buy AMC? The only thing, I don't know about Edgar, I don't know why, if it's down, why it's down, or what have you, Bodie Beard. Heinz says the only thing, if movie theaters are losing money proposition, why would Amazon get involved? That's exactly my point right now. Like, just wait, Chris says, are they losing proposition because they have so much debt? If Amazon jumps in, no debt, and it might make sense. Amazon still has to pay that debt, though. If they just let it default and that debt gets written off before Amazon comes in, they should just do that, right? Like, wait for it to, if Amazon buys AMC right now, they're still on the hook for all of that debt. If AMC goes bankrupt and all that debt gets written off, or most of it gets written off, then AMC becomes far cheaper for a company like Amazon to come in. So I think it's a great marketing opportunity, and I think that it would be genius that they would use movie theaters for their products. And I mean, look at what they did with Whole Foods, right? I think they could do something similar. And I've said this for a while, that I think that they should buy Kohl's. They already have a partnership with Kohl's. You can go in and return packages at Kohl's. They're very much involved in their stores and in that company. I always thought that Amazon should buy Kohl's as well, but I think this would be a great opportunity for Amazon to buy AMC when the timing is right. Right now, I just don't think that's it. Jose says, I love the idea of having a movie theater for Amazon. It's virtually a whole new platform. They allow more people to watch and release the movies. I agree 100%, Jose. Just not today. Just not right now. Check it in on Micron. Yeah, that stock's up 7%. Melanie said Micron's running, and it is going off. I'm just blown away by this. I'm blown away by Micron right now. The move on this is insane. It's so crazy. Looking at NVIDIA also is back up 2% after a pretty down day yesterday, decent pullback. Meta is now up 1.5%. Tech is just rolling right now. Tesla is also up 3% and still climbing here. All solid moves in general from the overall market, really. Let's check out the SPY. That is up now 1%. The Qs are also up 1.5%. Really crazy move here in the early part of the market open. Unbelievable here. Great stuff, guys. All right, let's get to your weird news of the day. Hey, do you remember these guys? Oh, no. Hold on. There it is. Do you remember these guys right here? This was if you guys don't, this is a fishing tournament where these guys, this is probably like, I don't know, 6 months ago, 8 months ago. These guys were stuffing all of their fish. This is a fishing tournament. They were stuffing all their fish with weights and like other pieces of fish. They would fillet other fish, just shove them down their mouths to make them weigh more. If you guys don't know how fishing tournaments work, the bigger the fish, the more that they weigh. the higher chances of you winning. So these two guys, look at that. They put all those weights in those fish, of course, and with those other fillets of fish to, make them weigh more. It was crazy. Well, that finally came to a head, and they were finally charged. So this is according to NPR. The cheating allegations surfaced in September when the Lake Erie Walleye Trail Tournament director Jason Fisher became suspicious when the fish turned in by Jacob Runyon of Broad Heights, Ohio, and Chase Kaminsky of Hermitage, Pennsylvania, were significantly heavier than typical walleye. They were scheduled to be sentenced on May 11th. Prosecutors plan to recommend a sentence of 6 months probation and later ask for an expungement of their convictions if they successfully complete their probation. That's, I feel like, is letting them off the hook. They are required to return their $100,000 boat that they won from a previous tournament. They received a little over $28,000 in prizes for winning the previous tournaments. The court records say that Runyon and Kaminsky were investigated near Toledo in the spring of 22 after being accused of cheating in different walleye tournaments. They are going to be, I think they're going to be charged. So yeah, here it is. Part of the plea deal was that they agreed to a 3-year suspension of their fishing license. So they won't be able to fish for 3 years. They also agreed to give up the $100,000 bass boat. I think, so they were being charged with grand theft and possessing criminal tool charges. I feel like that's letting them off the hook, don't you? These guys were willfully just shoving weights down these fish's mouths and essentially killing these fish. So no regard for that. And if you're an outdoorsman such as myself, I have a problem with that. Like, I love to fish. I love to go outside and do all those things, but I like to catch and release unless I'm actually fishing to eat the fish, right? But to just sit here and just abuse these fish like that and then, do it to cheat in a tournament, that's just crazy to me. And I feel like that these guys got off luck easy. They pleaded guilty. They're going to get a suspended fishing license for 3 years, and then they have to give back their bass boat. Whoop-de-doo, right? That's crazy. Letting them off the hook. Yeah, you like that? That's crazy, but go look that up if you guys haven't seen it. There's all kinds of video on it. It's kind of hilarious the way that these guys go off on them. But that's your weird news of the day. Maybe not so weird, but it's news. It was a light day for weird news, which usually I don't have a problem with, but for some reason there wasn't much out there this morning. So, your weird news of the day, if you guys hadn't checked it out yet, the link's in the description about AAA Debt Solutions. If you guys haven't checked out AAA Debt Solutions, they are a new sponsor of the channel. If you're struggling to keep up with your credit card debt, especially as we are seeing credit balances reach record highs in this country, AAA Debt Solutions is here to help. Their debt consolidation services make it easy for you to manage your debts. With one simple monthly payment, their team of passionate professionals understand the challenges that come with managing finances in today's world, and they are committed to finding innovative solutions that work for you. With their help, you can achieve financial freedom and peace of mind. They offer personalized debt consolidation plans that are tailored to your unique needs, so you can be sure that you're getting the best possible solution for your situation. Plus, the team always is there to provide top-notch customer service and support. Don't let debt hold you back any longer. Take control of your finances with AAA Debt Solutions. Contact them today to learn about their debt consolidation services and how they can help you achieve your financial goals, as well as supporting the channel by clicking the link down in the description below. If you guys wouldn't mind helping a brother out in order for you to get help out of your debt, your credit card debt, go check out AAA Debt Solutions down in the link below. Also, shout out to AAA for supporting the channel. Thanks so much. All right, so let's get into some of the questions. I saw that Darren was asking about Crocs. Let's take a look at that. So I wanted to make sure that we address some of these comments. Darren was asking about Crocs. He says, I have a problem. Crocs is moving up, and I have calls that are expiring Friday. I can what is this? I can BTC and break even and hold my shares, or let it expire and close my shares but make $1,000. Not sure what to do. I mean, let's just take a look at Crocs real quick. So let me just read this back. I can BTC, I don't know what that means, and break even and hold my shares, or let it expire and lose my shares but make $1,000. Not sure what to do. I mean, how much are you up right now? Are you up more than $1,000? Because then I would just close out your position. If it were me, I would close out. But it just kind of depends on where you're at. You have calls that are expiring Friday. I mean, what's the strike price? Where are we at with this? Are you in the money? I'm assuming so. I would hope so. Crocs right now is up 1.33%. Looking at the daily chart, and it's kind of just been sideways over the last couple months. You know, they had this huge run, Crocs did, and you know, virtually since July, it's just had a monster run, and it's kind of just been sideways. So it's very interesting. I'll keep an eye on this, but I would say, Darren, that if you're in the money and you're already profitable, and if it's more than $1,000, then just take the money. Sell for profit, man. Somebody was asking about natural gas. There was an article that came out this morning from Barron's about natural gas or gasoline as well, kind of reaching its peak. I'm still not buying into that. Now, there's one big caveat to this, and that is that this relationship between Russia and China has kind of put a wrench in things. It was first thought that the demand coming back from China once they lifted their zero COVID policy, that energy would do well because of the demand coming back from China. Obviously, those exports would certainly make a lot of money for oil companies. And then China decided to do a deal with Russia. And Russia's making claims now, whether or not they are true is neither here nor there, but they're making claims that they will be able to fully support China with the supply that they have. So, you know, can natural gas or can energy really kind of overcome that? I'm not quite entirely sure, to be honest with you. That kind of threw me for a loop a little bit. But what I will say is that I don't think demand's going to slow here in the States or anywhere else. And I think it's only going to get stronger. If you guys didn't catch me talking about this, I think it was yesterday or Monday, I had made mention that, in this 10-year cycle of energy, March and April and May, were the strongest 2 months of the year for energy. And we're already starting to see this bounce. Look at the OIH right now. This is your oil services ETF. So a lot of the oil services companies are in this ETF, such as Halliburton, Schlumberger, and what have you. You can see the bounce that this has had on the daily from Friday over the last 4 trading days, including today. It's had a decent bounce. It's actually moving above that 278 level, and I think that the OIH could actually do well in the coming months for the reasons that I just said. I don't think demand's slowing down, and I think that there's actually some reasons to get bullish on energy. That's my thoughts on that. Oh, thank you, Darren. Buy to close. I appreciate you clarifying that. Yes. Strike is at 116 on Crocs. Let me just revisit Crocs here real quick. Bottom line with energy and gas in general is that I think that I would remain bullish on it. I would remain bullish on it, in my opinion. Darren, in the money, strike is at 116. It's awfully risky to just hold this through Friday, I think, on the chance that it actually goes below 116. If it were me, Darren, I would probably just take the money and run, bro. Take the money and run. Arpod, what trades did you take today? I haven't taken any trades today. What stock would I buy now? I would probably wait. Today's not the day to go long on anything, I don't think. Yesterday would have been the day to go long, and I would have chosen probably Meta Platforms. Meta just seems to continue to be the hot stock right now. if I was going to buy something. But I would have bought it yesterday. You got it, Darren. WTI is trading above 74. Yeah, I mean, look at the XLE right now. The XLE is doing good today, too. At least last I checked. This is energy ETF as well. It's got Exxon, Chevron, your big names in here. Fell really nicely into the zone. Looks like that's probably going to continue to pop. We'll see. Sanya Yoshi, is it Joshi Yoshi says, oil to me, oil looks bearish, just a pullback. Well, if it's just a pullback, how does it look bearish? Right now, we're still seeing higher lows out of the XLE, and this is going all the way back to 2020. This is your weekly chart on the XLE going back to 2020. Let's draw this trend line here. Boom. Nothing about that to me looks bearish at all. And you can see the last 2 weeks on the XLE have been quite good. You have this moving into a zone on the XLE as well on the weekly chart. So we're looking at this from a 30,000 foot view. I think energy is still going to do well. We'll see what it does once it gets above 82. If it does, it breaks out of that zone, and it's probably going to continue to make some pretty strong moves. We shall see. But we're getting into the months now where the XLE should start to do well. It's up 1% today. Bodie Beard's asking about making mention of Bitcoin. Yeah, that's up 4%. We talked about that earlier this morning. It's actually come down a little bit from where it was earlier. I believe it was up 5%. No? This is your 5-minute chart on Bitcoin. Yeah, it's kind of hasn't moved all that much. Was there any other questions about specific stocks? Did I miss somebody? Can I take a look at NVIDIA and ask Ninu? I already looked at NVIDIA. We already talked about that quite a bit. Just scrolling through here. I think that's it. Guys, that's going to do it for today's show. Thanks so much for tuning in. As always, I'll be back here at 3:45 p.m. Eastern Time. Going to be covering Restoration Hardware's earnings, as well as whatever else pops up in the markets that is newsworthy, and we'll be able to hang out then. Guys, I appreciate you hanging out and supporting the channel. Make sure you hit that thumbs up button if you wouldn't mind. I certainly would appreciate it on your way out the door, and I am not going to forget about birthdays today. It's a light one for birthdays, but we have Chris D'Elia, hilarious comedian. If you guys don't know about Chris D'Elia, he is famously known for impersonating drunk chicks. Go check that out. Go look him up on YouTube. It's hilarious. He is 42. Brendan Gleeson, the Alistair Mad Eye Moody from Harry Potter, is 67. Lucy Lawless, if you don't know who she is, she's an actress and it starred in Hercules, the TV show. She is 54. Scott Wilson, rest in peace. He would have been 81. He was the grandfather, the father in The Walking Dead and all kinds of other movies and TV shows. And then, of course, we can't forget about Brandy Love, who is the Big 5-0. And she is known for, has starred in 1-800-BANG-ME, Almost Relatives, Classy Cougars, Internet Outage Poundage, and My Mom Does What? Guys, those are your birthdays. Thanks so much for tuning in. I'll see you this afternoon at 3:45 p.m. Eastern Time. Cover the end of the market. I love you guys. Enjoy the rest of your day. See you this afternoon.